Welcome back, y'all, to the Solomon Project, where it's not how much you make, it's how much you keep that counts. I'm your host, Richard Burns. Welcome to another episode of Whip It Out Wednesday. It's been a long time since I whipped it out, but I think it's important for you to see and understand the importance of whipping it out for you guys. Now, I don't know how long it's been since I whooped it out, but I think it's important for everybody here to see the importance of applying discipline and consistency. I'm going to show you maybe 2 or 3 accounts of working class people. Not wealthy, working class. And these people, they have, well, when they first started, they had absolutely no experience as far as investing in the stock market is concerned. None at all. But if you want to participate in the stock market, and this is not financial advice or investment advice, it's a very simple process. Matter of fact, in the description below the video, you'll notice that there will be a link for Webull, which is one of the platforms that I definitely enjoy using. If you click on the link, you can get as much as 20 stocks for free. Whole stocks and fractional. It all depends on how much you deposit, but whatever the case is, if you open up the account with the link, Webull will give you up to 20 stocks for free. Again, the people I'm highlighting, they're not wealthy, but they're not sitting on the sidelines either, like what most people do. Let's go ahead and run a quick check on who it is that I'm talking about. So let me start with Jetta. That's what we're going to call him. We're going to call him Jetta. That's his nickname, and that's how we'll identify him. Jetta. So Jetta is second to the latest addition to the family, and this is what he's been doing. So he's been depositing employees. Yes, I call them employees. When your money gets transferred from your bank account to your investment account, these are now employees, and he's putting his employees to work. As they work, the corporation, right now he's focusing on a single corporation. He's building that up so that he can continue purchasing a different corporation in order to create diversification, so he doesn't put all his eggs in one basket, but he's focusing on this one. And as soon as he reaches 100 shares, this is the plan that he agreed to go ahead and do. So once he's up to 100 shares, he will be diversifying by trying to build up 100 shares of a different company. And once he's done with 100 shares with that one, he's going to grab another one. That's his approach. Something similar to what CJ was doing. AJ's approach is a little different, but either way, the most important thing is that they're sticking to their plan, they're disciplined, and they're consistent. So let's have a look right here at Jetta's account. Excuse me while okay. So this is the total amount. This is not the total amount that he deposited. Remember, Webull gives you up to 20 shares for free. So apparently, somewhere in this portfolio, the shares that he got for free are also calculated within his account value. And now, here's a breakdown. So he has money transferred into his account. Not money, excuse me, please. He's got employees transferred into his account on a weekly basis. It's $20 a week, and as you can see here, every week that money hits his account, he purchases that one corporation, the stocks for that one corporation that he's focusing on. So without fail, and this is all done automatically, and because of the fact that it's done automatically, he doesn't have to think about what he's going to do. It's already done. It keeps him consistent. And because of the fact that he doesn't have to constantly make a decision every week, it takes a load off the fact that he has to be disciplined. The discipline that he has is applied to making sure that he doesn't spend beyond the amount that he needs to continuously transfer employees from his bank account to the investment account. That's where the real discipline actually exists. So he sat down and developed something so that he can make that possible. And as you can see here, the platform takes over. It extracts the employees from his bank account and brings it on over to the investment account. No brainer, y'alls. No brainer. Now, because the money / employees are being transferred on a scheduled basis, on a weekly basis, and he purchases on a weekly basis, on a scheduled basis also, he's doing what's called dollar cost averaging. And dollar cost averaging can be extremely effective. But even though you're doing dollar cost averaging, there's something very important you need to know, and I've always mentioned it in previous Whip It Out Wednesdays. You have to control your emotions. There are going to be moments where you see that the value of your account is shrinking or going negative or something like that. And it's important that you keep your emotions in check. If you see it going negative, it might be negative for a while. When you're investing long term, there shouldn't be a concern. So now let's go over to CJ. CJ and AJ are both, and no, I don't have JB's information because JB's in the military and I'm not sure where he is right now. We haven't been in contact for a couple of months. So now with CJ, same deal. It's a scheduled withdrawal from his bank over to his investment account. It's scheduled. It's done. He has to make sure that he stays within a certain limit of spending so that he can have the money or the employees available to be transferred over to his account. However, with CJ's account, now that I remember, he does have to go in and transfer. He has to execute that transfer every week. But he's been disciplined. Again, he's been disciplined. And he's been consistent. So as soon as that paycheck comes into his bank account, he immediately initiates that transfer of employees to his investment account. CJ's approach is a little different from AJ's approach also. Now, CJ has more than one, so he's already diversified. He has more than one corporation of which shares are being bought. But just like Jetta, when he hits 100 shares, he goes to the next one. Right now, if I'm not mistaken, CJ has 5 corporations of which stocks were bought. So I don't remember the last time I showed CJ's account, but this is where it's at right now. So if anyone here has been with me for a while, has been in the Solomon Project for a while, and can go ahead and locate CJ's account from the last time I showed it, you can see how the account value has been increasing. And let's go over to AJ's account. Now, AJ was the first account that I was presenting. And I didn't bother to take a picture of what he sent me, which had the performance of the portfolio from the time he opened it. But this is a one-day change in his portfolio, so he's up for a little over 4% for the day. And again, with AJ, you could do the same as you did with CJ, just to see the last time I presented AJ's account, so that you can see for yourself whether or not the account value increased and how much it has increased. AJ, just like Jetta, has the automatic withdrawal. In this case, his automatic withdrawal is $35. Jetta, as you were able to see, was $20. CJ is $100. However, CJ started much later than AJ did. I mean, much later. And it's the reason why, well, number one, because of the amount that he deposits on a weekly basis. And number two, the length of time that he has depositing that amount. You will notice that one account has a larger value than the other. But it doesn't matter. This is one of those cases where, in this presentation, of course, where size does not matter. Finally! So AJ deposits $35 a week, and it's automated. There's no thought process. The initial setup was the thought process. Once everything was all said and done, once he completed the setup, that was it. Done deal. Done deal. Again, these three individuals that whose accounts I'm presenting, they didn't study finance. They didn't graduate from college. They just made a decision and applied discipline and remained consistent. That's it. Like I said, you can go ahead and you could learn terminology. You could learn how to read the charts, become a technical analysis wizard. You can go doing fundamental analysis all day, every day. I can tell you, because I used to be a professional, I used to be a stockbroker, I can tell you that there's a huge percentage of professionals that don't outperform people like AJ and CJ and Jetta. Professionals that don't outperform them. There are many ways of approaching this thing, but I just gave you the two most important ingredients: discipline and consistency. That is it. There's nothing. You can participate in all the courses available, as many courses as you want. You can participate in all of them. What you'll discover is that you're not going to be making much more money just because you took a course, number one. But if showing off is your thing, yeah, you'll be able to impress people with the lingo, with how you respond to other people who are experienced in the market. Again, you're gonna draw attention. You're gonna give people the impression that you're some genius or something, whatever. But a lot of these people that do the same thing, they're not outperforming. One of the indicators that are used, or standards that are used, to determine whether a person, or mainly a professional, is performing, underperforming, or performing, or overperforming, is the performance of the S&P 500. That's how they're judged. The S&P 500 gives a return on average, and we're talking about a lot of years, I think about 100 years or maybe more, of a approximately 11% return. So if you're performing, if you're getting a return of less than that, then you're underperforming. If you're performing somewhere around 11%, then you're performing along with the S&P 500. If you're performing above that, then you're doing really good, because the vast majority of professionals underperform the S&P 500. So you can take these courses, you can spend money on these courses. These courses are not cheap. But if your intention is to sound like you know what you're doing, then by all means, take your courses. Understand this: these content creators that are offering courses, the returns that they're making are not on their investments. The money that they're making is from the courses that they're selling. Keep that in mind. So when you hear these people throwing numbers about how much they're making and this, that, and the third, keep in mind that this is all from selling the course, not the actual performance of their portfolio. Now, One of the tricks is that they will show you trades, and there's a distinction between trading and investing. They will show you trades that have yielded a high percent return. What they don't show you is after a subsequent number of positive returns, they don't show you that one trade that wipes out everything they made and puts them in the negative. They don't show you that. They don't show you that. And that's where they catch people out there. When you take the course, I would imagine, because I've never taken a course with these people, but if you take a course, I would imagine that they select the best performing trades to encourage you and make sure that you continue following through with the course, maybe buying some extra stuff with the course. I don't know. But please beware. So, what can you get? What can you get out of this? I'm hoping that you can see for yourself by showing you the performance of the portfolio of 3 individuals. One has a wife and 2 children, working class. Another one is in the military, single, no children. And another one is single with children. All 3 working class. All 3 made a decision. And all 3 are benefiting from that decision. Now their accounts are positive. Their accounts are positive. And I want to take a sneak peek at the market. I'm gonna focus on the standard bearer, which is the S&P 500, and let's see how it's performed year to date. So year to date, the S&P 500 is down a little over 4%. I just showed you CJ's account where, no, was it CJ's? No, it was AJ's account. AJ's account wasn't negative 4% like the S&P 500. It was positive year to date over the S&P 500. So he's outperforming the S&P 500 and more than likely outperforming most of the professionals that are in the industry. They're just like everybody else who were afraid, who built up the courage to participate in the stock market. I understand the fear. When you head to the news or head to whatever source of information that you're getting, anything related to investing and business, you're going to hear horror stories. You're going to hear some incredible losses. You're going to hear the fear factor. You're going to hear everything that will scare you from participating. I just want to let you know before I end this. Think about the fact that the stock market has been around since the mid-1600s. If you want to take the moment, go right ahead. But since the mid 1600s, I want you to check and see how many natural disasters there have been throughout the world that have devastated countries, devastated economies, devastated trade. Check and see since the mid 1600s how many wars there have been, how much famine there's been. Just in the past 120 years, there have been devastating events. And yet, the stock market is still here. Let's not even talk about the bond market, because not only is the bond market 4 times larger than the stock market, it predates the stock market by thousands of years. The use of debt instruments have been around for thousands of years. I understand you're afraid. My question to you is, that fear warranted after what I just explained, after what I just told you? Because if it's not warranted, then maybe you might want to get off the sidelines. Just a thought. So you saw CJ, you saw AJ's, and you saw Jetta. There are 2 more, but they don't feel confident enough. Well, JB is because of the fact that I can't reach him right now, but the 5th member may not feel comfortable sharing her information. That's understandable. Now, points to remember. Number 1, these are working class people. These are not wealthy people. Point number 2, no, they don't have college degrees. They don't make a ton of money. And number 3, if you plan on participating, what are the 2 most important things that you need? Discipline and consistency. That's it. So I'm going to leave you all with that. Got my head on a swivel now because I got all this bling now. I got a few people giving me funny looks. You know how that is. Stay fresh and keep it profitable. I'll let Kitty handle the rest.
Arabam Dacia, seviyorum çift kalem maça. Göremedi kimseden fayda. İşler